Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about a figure that we need to keep an eye on, and that is the amount of listings for sale at the moment. There's been a sharp increase. In fact, we're at nearly a 10-year high for property listings at the moment. In this video, we're going to deep dive into what impact that could have in the housing market. Does it mean we're starting to see cracks? And could it lead to a house price crash? We're going to talk about where this data comes from and what are the expectations on sales volume for the next few years as well. So if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 42,000 subscribers, which is crazy. And let's get some more views on this video. Simple. We just smash the like, tickle the like, do something to the like button. That hints to the YouTube algorithm that more people need to watch, and that really helps the channel grow. So thanks to everyone that does that. So there's lots of different figures that we look at on this channel, and I'll give you some examples. We look at Halifax every month. They give us their house price index, and that gives us their data. That's the sold prices that have been agreed with them, just for their portfolio of properties. Now, they've got various brands like Lloyd's and Halifax, but it's an indication on what their market looks like. We look at the Nationwide as well, and so Nationwide also have a house price index. They've got Virgin Money, they've got the Mortgage Works on the buy-to-let side, and they've got Nationwide as well on the residential side as well. We also look at the Office of National Statistics data. We just did a video this week about that, which gives us the final house price data from everybody. But that has a bit of a lag. And that gives us cash buyers, it gives us mortgage buyers, and every transaction that happens in the market, albeit about 4 months behind. So other data we need to look at is things like the Rightmove asking prices. Lots of people, when I make videos on that, say it's irrelevant, it shouldn't be included, and we shouldn't be focused on it. But I disagree. I think that asking prices is very important because it gives us the early sentiment in the market. If people are getting desperate to sell their property, they want a fast sell, they need a fast sell, they must sell their property, you're going to see them coming to the market with lower asking prices than everybody else in order to get that sale moving very, very quickly. And that's something we've also got to keep an eye on. So Rightmove have released some data this week, and they're saying that the amount of properties, the volume that sits on Rightmove right now is significantly higher than normal. In fact, they haven't seen this sort of level of properties for sale since 2015. So that means that there is some properties that are suddenly coming to the market. Now, why might that be? There's a few reasons. In the last year and a half or so, a lot of people sat out the market. Interest rates were going up, inflation was going up, and so a lot of people felt that it wasn't a great time to buy or to sell a property. And we saw that in transaction volumes. That was something that was really significant. We also saw this year a big, busy start to the year. The stamp duty went up on April the 1st. And so January, February and March had really high transaction volumes. In fact, 500,000 properties were sold in those first few months. Now the market has started to significantly slow down. There is less buyers, according to Rightmove and Zoopla and Halifax. They've all said there are less people looking for properties at the moment. And so the fact that we've then got an increase in houses for sale means we could start to see some house price drops. And that's something that we've really, really got to keep an eye on. And so right now, you've got let's give you some data here. So we have got 11% more listings than this time last year. 11% more listings. That's not insignificant. But then we've got less buyers looking at those listings as well. So we've got more listings than we had last year, and we've got less viewings happening at the moment because no one wants to buy just after this massive increase in stamp duty, and that is a little worrying for a lot of people. Now, what could keep this market moving? Well, rate cuts are going to help. So we've had the Bank of England cut rates a week or so ago. We've had a lot of lenders, more than 20 or so lenders that have cut rates. I think we've got 14 mortgage rates now that are under 4%. And that eventually will get some people back into the market and looking at these listings. But what could happen is if all these listings just sit on the market, you've then got two choices. The seller either sits and waits out until the market recovers, which some of them will do. Some people will say, look, I want 500 grand for my house and that's the lowest I will go. And I will just wait until I get that 500 grand. Some people have somewhere where they want to buy already. Maybe they're downsizing, or they're moving abroad, or they're just moving a different area, or they just found the perfect house that they want. And those people selling might start reducing prices, which could start hitting house prices significantly. It doesn't take many people to start cutting prices in order for everybody else to say, wow, they're only 475, we're 500, we need to go down to that 475 as well, or we're not going to get any viewings because we have a like for like property. And so very quickly, you could start seeing house prices with a downward momentum. Now, I'm not saying that's definitely what's going to happen, and that isn't what is showing up in the data at the moment. What we've got in the data right now is we've got more listings and we've got less buyers at the moment. And so a decision will be made. Some will remove their property for sale just because they didn't get any viewings. Maybe that's you at the moment. And in fact, there's tons of you that watch the channel at the moment that do have that scenario where you've had your property on the market for 6 months, it's just not selling, and you're going to take it off and wait till the market recovers. But this could move quite quickly, and we could start seeing price cuts moving through the market and pushing us in that downward momentum. What do you think is going to happen? It's a very interesting time at the moment. We've got the economy is on a knife edge. You've got an increase in national insurance. You've got an increase in business rates. You've got an increase in fuel costs, energy costs, which hit businesses really, really hard. That could slow down the economy. If people don't have jobs, they're not going to buy houses. That could lead to lower interest rates, which could stimulate the market. You also could have a scenario which happened last summer. And last summer, the market slowed down significantly. It was very quiet, like it is right now. The reason for that at that time was that we knew interest rate cuts were on the way. Inflation was 2-point-something% for a while. So we knew eventually we're going to start getting these rate cuts. And so what lenders started to do in order to force people to buy property and get moving was they cut rates themselves, regardless of what the Bank of England did. And if lenders aren't busy at the moment, you're sure, I can be certain, and you can be certain too, that they will start cutting rates in order to get your business. And that could stimulate the market. And this could all be a nothing burger very, very quickly. And we could recover that 11% of buyers that we need in order to get the market moving again. What do you think is going to happen? I'd like to know your thoughts, questions and opinions in the comments below. Do smash like, do subscribe as well. This is important data to keep an eye on. Listings going up and not having the buyers on the other side is an indicator of a slower market that could move house prices down. Anyway, do check out all the other content as well on the channel, including this video right here.